Welcome to Absolute Trust Talk with your host, Kirsten Howe. Absolute Trust Talk brings you tips, tools, advice, and interviews to help you build a reliable knowledge base on estate planning, business, and finance to start preparing for your future today.
Hello and welcome to Absolute Trust Talk. I'm Kirsten Howe. I am the managing attorney at Absolute Trust Counsel, and this is our podcast here at Absolute Trust Counsel. And today I have a guest. We're going to talk about the one phrase in American English that is more terrifying than almost any other, IRS audit. And I will admit that I have personally, sort of some Scooby-Doo based vision of what happens in an IRS audit. In my mind, the IRS sends a team of agents to your office. They camp out there for a few weeks. They go through every drawer, every file until they find that one thing that you forgot to save the receipt for. And then they take you to jail. And I'm pretty sure that's not exactly how it goes. But I hesitate to say this out loud almost because I don't want to jinx myself. I never have been audited by the IRS, so I really don't know what happens. But I want to know, and I want you, listener, to know too. So I have invited my esteemed colleague, Tony Kim, here to talk about IRS audits. Now, Anthony Kim is a founder of the law firm Kim and Rosado. He specializes in assisting clients with federal and state tax matters. He worked for over 26 years as an attorney with the Office of Chief Counsel, Internal Revenue Service, as a legal advisor, and has litigated some of the most complex tax issues for the U.S. Treasury Department. In addition to his government background, Tony worked in the private sector as an executive director of tax controversy and risk management for Ernst & Young. And in this role, he led their Pacific Northwest controversy practice, helping clients to address a wide range of IRS compliance issues. He represented Fortune 500 companies and high net worth individuals in that capacity, representing them before the IRS. Just so you don't think he's nothing but a tax nerd, he also has served as an adjunct professor at St. Mary's College, where he trained students to become qualified to serve as volunteers at local nonprofit organizations in order to assist low-income people and families with their taxes. Tony, welcome. So great to have you here.
Thank you. It's a pleasure to join you.
Okay. So now, when you worked for the IRS, the United States government was your client and you went up against taxpayers. Now that you are back in the private sector, your clients are individuals and businesses dealing with the IRS. So you're going back up against the IRS. And just those of you who aren't lawyers necessarily who are listening, you just can't even imagine how valuable it must be to have the attorney representing you be someone who knows exactly what's going on the other side, because they lived that life for 26 years. That's incredibly valuable. So let's start. We're here to talk about audits. What triggers an audit? What causes the IRS to start an audit?
First, I think if I were listening, I'd say, well, what are the chances of an audit? And it's very rare. So if you go on to the web and you just type in Internal Revenue Service statistics, you'll get a link and it has historical data on audit risk. And it goes and breaks it down by year. It breaks it down by categories, such as if you're a partnership or a corporation or individuals. And then it breaks down even further. If you're an individual, it segments it by your income level. And so if you look at your income level, you could sort of see directly exactly what your percentage of audit is. And it's very low. It's, I think, maybe under 2% risk for most individual levels of income. So of course, the higher your income goes, the higher your risk. But overall, the risk of audit for an individual is very low. That's just the statistics. So that should be comforting to a lot of people because an audit is very, very intrusive and very stressful. Yes.
Sure.
So back to the question of, well, what causes an audit? There could be various factors. The main one being what's called a discriminant function score, what's called a DIF score. And there are various elements, variables that go into this DIF score that would prompt an audit. I don't know what goes into the DIF score. That's something that's published by the IRS. It's a random number, and based on certain criteria, the DIF score will pop out certain individuals or entities that will then be selected for audit. And so that's one. It's just a variable function. Now, separately, there could be a manual survey of returns. When I worked for a certain division called a Global High Wealth Division, it focused on very high wealth individuals. They would actually pull certain individual returns from that population of very high wealth individuals, and they will just survey the returns, physically look at returns and say, well, let's look at this and this. If they saw certain things from their survey of returns that piqued their interest, they may then manually select and say, okay, based on our survey, we're going to pull these returns and they're going to be subject to audit.
Okay.
So there's the manual level. Then there's whistleblower. So if someone says, I have information, I personally know that this person or this entity has these things that I know that they're doing that's contrary to law. They would then write a summary up and then send that to the IRS. So now the IRS doesn't have a guess as to whether a return should be audited. They have specific information. So the IRS may take action on a whistleblower submission. Or the easiest one is a discrepancy between what a taxpayer prepares and reports on a return versus what a third party reports.
Oh, okay.
So an example could be,
you miss a 1099 or something like that.
Right. And sometimes that's innocent thing. You think you reported everything, you forgot one. Right. And it could be $700 that Wells Fargo reports on a 1099, says, Kirsten, you received this dividend or income, and you forget and you don't report. So all of a sudden, the IRS has a 1099 from a third party that says, this is what Kirsten earned in 2024, but Kirsten on her return didn't report it. There's a mismatch. Right. Okay. So that could trigger what's called a correspondence audit. So that's not deep enough where it creates a huge audit. It's just a letter from the IRS saying, we see this discrepancy. Can you explain it? And then you respond, and that's the end of it. So there are various inputs that would cause an audit. But overall, despite all these sources that could trigger an audit, the percentage is very low. And right now, we're in February 2025.
Right.
The listeners probably have heard and seen on the news that there is a serious downsizing of the federal government, including the IRS. Mm-hmm. So even with the historic low numbers of audits, I suspect for the next 4 years, those numbers will be even lower.
Right. Because there's just not enough manpower to do them.
That's right.
I guess that's one good way of looking at all of this.
Yeah.
I don't know. Okay. So for whatever reason, the IRS decides it's going to audit somebody. What's the beginning? What's the first step they take?
Well, the first thing that a taxpayer will get is a letter. So the IRS will not contact somebody by phone or email. It's a letter.
We tell people that all the time. No, the IRS is not calling you to pay your tax bill with your ATM card. No, they don't do that.
And because the IRS contacts taxpayers by letter, it's very important that taxpayers keep the IRS aware of your address. Yeah, because if you change addresses and the IRS doesn't know, then the letter it will go to your old address and it may be forwarded to your new address. Now, if it's not forwarded to your new address for some reason, it's up to you.
That's your problem.
Not the IRS. Yeah, it's your problem. So you've got to make sure that you keep up with the current information to the IRS. Now, the IRS will track your address changes based on the return filed. But let's say you file a return in April of the year, but in May, you change addresses. So for the period after you change your address until you file a new return, the IRS doesn't have.
They don't know where you are. Yeah.
So you need to let the IRS know and say, I've moved and I have a change of address. Let them know. And as low as the risk of audit is, you don't want any information, let's say an audit notice, to go by the wayside.
Yeah.
Because that can create problems. So one advice is always keep the IRS alert and informed of your current address, because the correspondence letter will go to your address on record.
The address that they know about. That's very interesting. And I'm just going to tell you, it has never occurred to me to do that. I'm an adult. I've moved many times in my life, and I've never written a letter to the IRS saying, hey, I moved.
So there's a form, and the IRS has thousands of forms. If you just go to the web and hit IRS change of address form,
okay,
the form will come up. You complete it. It's a very simple form, and then you file it. Real easy.
Okay. So that is worth the cost of this podcast right there.
There have been so many taxpayers who've come to us and said, well, I don't know what happened. The IRS is starting to collect. I never got a notice. And then the question then I'll ask is, have you changed your address? When's the last time you filed a return and so on? And then they say, oh, I don't know about change of address forms and so on. And you can, and I have, when I've changed addresses, alerted the Postal Service.
Yeah.
I've got to change address, but you've got to let the IRS know.
Yeah. Those two departments don't talk to each other.
No, you rely on one to help with the other. No, you've got to, it's too important. So you've got to let the IRS know.
That is an important one. Okay, good advice. Okay, so they start by sending out a letter. And what is this letter going to say?
You've been selected for audit. It'll tell you the year that you've been selected. So it could be 1 year, it could be multiple years. And then it'll tell the taxpayer next steps. We'd like to schedule a meeting. We'd like you at the meeting to provide the following information. And that request for information may expand or it may be limited to just that. And it'll also in that letter say, we'd like to meet at a certain date. So you can suggest another date that fits your schedule. And it'll also alert you to whether you'd like to have a representative serve as your point of contact for the IRS. So some taxpayers say, well, I don't want to deal with the IRS. It's too stressful, or I'm ill-equipped to do it on my own. I want somebody to represent me. So the letter will say, if you'd like, you can do that. Select one and let us know. And the form, and of course, the IRS has more forms than you can imagine. There's a form for that, and that's Form 2848. You designate someone to serve as your power of attorney, your representative, and a taxpayer doesn't need to show up for the audit, which a lot of taxpayers select. And probably that's a good thing, because I've had, on the IRS side, I've had instances where a taxpayer doesn't quite know what to say and what not to say. And sometimes what they shouldn't say gets out, and it's very difficult to put the toothpaste back in the tube.
Right.
So you've got to be very careful about that. So you probably want to take the lead from the letter, which invites you to have a power of attorney, some representative represent you in the audit, and then you can do that. And then you meet on the selected date with the information that's limited at that point to a certain categories, and then you proceed with the correspondence or the meeting.
Okay, so they might be letting you know in that letter, we're interested in talking to you about this particular topic. And I hear you saying you would advise people to have someone represent you. Don't do it yourself, because you're going to say something that you shouldn't say. That's, that's what lawyers will always say. Don't talk to the police. Don't. Let me do it. And you're saying the same thing about the IRS.
Yeah, I prior to this meeting with you, I had an early call from someone that was considering some action with the IRS on a collection matter. And I said, well, you could use me, but in what you're needing to do, you could probably do it yourself, because it's a collection matter. So there's certain things that I think you don't need to hire or pay a representative to handle for you. But an audit is not one of those. I think, because an audit, if it goes sideways, it can create a deep dive into more issues, or it can open up other years, or you could say something that may take a civil audit to a criminal. And that's where you want to be very thoughtful and careful about how you handle the audit, because it can go sideways. So what you want to do is make it simple, be responsive, be very intentional about how you handle it to avoid the worst case scenario. And to me, the worst case scenario, there are a couple. One is it becomes more invasive. That's bad. And the other further dilemma is if it goes from civil to criminal. Yeah. And so in my experience, what happens is in that letter, that instance of a civil audit, if information is presented or found by an agent that indicates that there's been some type of fraud, an intent to deceive the government, then the agent will then say, well, I think it's gone beyond civil. And then they may shut down and close the civil audit and then refer it for a criminal investigation. So that's very rare. But despite the fact that it's rare, you just want to make sure that you're not part of any situation that gets in sniffing range of that.
Right. That's too big a risk, even though it's rare, it's unlikely, but if it happens, it's huge. Yeah.
Yes. And it's sort of like, and perhaps it's a bad analogy, but it's sort of like life insurance. I never think I need it, but I just want to make sure I have it just in case. And so getting the right representative for you in an audit is somewhat like insurance. I don't know the venue. I'm going to get nervous. I may say things that when I'm nervous, I shouldn't say. Let me get somebody else who should know what to say and when to say it. Represent me.
Okay. So that somebody else, should that be an attorney? Should it be somebody like you? Or, people go, I think, back to their CPA and say, hey, I've been audited, I'm being audited, and the CPA represents them. What do you think about that? In what situations is that appropriate as opposed to, well, you probably should have an attorney there?
Yeah, great question. And I think there are 3 tiers. One is I'm going to represent myself. I'm going to let my CPA or accountant represent me, or I'm going to hire a tax attorney. So in an instance where I think a person can represent themselves is where it's maybe a correspondence audit. That is, it's just a mismatch. The IRS sends a letter and says, Kirsten, I saw that Wells Fargo paid you $700, but I didn't see it on your return. Well, you don't need an accountant to correspond. Say, oh, I made a mistake. Here it is.
Yeah.
So if it's really simple, you can handle it yourself. You don't need any representative. Now, if it's slightly higher than that, where it may be a depreciation schedule or something else that is outside of your comfort level and you relied on the accountant to handle it, but it's basic, then the accountant ought to be able to handle that. And because they're familiar with your return, and you don't need somebody else that wasn't involved to start from scratch. Because if you hire someone like me who didn't work on your return, I've got to then spend time reviewing your return and bill for that time and so on. So there's the ramp up to get to a level of understanding on the return that the taxpayer has to pay. Now, when you make that decision, you want to figure out, all right, is it worth the time and money? And there the taxpayer has to make an assessment of whether it's worth that extra cost. Mm-hmm. And so it's difficult, but the taxpayer then has to figure out, all right, is there enough on the return that I need to go to the next step of hiring somebody beyond my CPA or accountant? The other thing too is to figure out, well, I think also have to consider that when an accountant represents your taxpayer's account, your account, when they represent you before the IRS, they are doing 2 things at once. One, they're advocating for you, but also they are representing and advocating for themselves.
They're defending their work.
Their work.
Yeah.
So that sometimes can be misaligned.
It's a little bit, it could be a conflict.
It could present a conflict. And I wouldn't say, in my experience, it's happened sometimes where I've looked at the situation. I'd say, maybe I think you may want to bring in your principal, the taxpayer. Oh. I'd like them to be brought in. And that's where I recognize a potential issue.
Got it.
I've also had that with attorneys too, where an attorney will represent a client and I see a potential conflict that affects the attorney that's representing. When the attorney's involved, I send a letter. I say, I identified a potential conflict of interest. Please get a written statement that your client acknowledges that there's a potential conflict and still wants you to represent them. So there it gets a bit more formal with attorneys, but with CPAs, I think it's inherent in what they do. So that's something that clients should be aware of. Well, if it's complex, probably you want the accountant, not you, to handle it. If it's a bit more than what you think is reasonable, I think if it gets really complex, I think, and you feel a little bit uncertain, you may want to then consider the next level, which is someone who didn't work on the return, then represent you.
So in this audit, the IRS representative is looking for whatever they're looking for, but they want to close this and say, okay, this is what we're going to do. You're going to pay $7,000 and then we're good. Mm-hmm. or whatever, some kind of outcome. They're going to come up with that solution. And then the taxpayer either says, okay, or.
Right. So there are distinct functions: a revenue agent, or sometimes it's a tax compliance officer. So if it's not that complicated of a return, there will be what's called a tax compliance officer. If it's a bit more complex, it'll be a revenue agent.
Okay.
But in either case, the function of these 2 officials is to just determine if the return positions are correct. And if incorrect, they'll say, well, we're going to make an adjustment because it's incorrect. here's the additional tax liability and perhaps a penalty. They don't have settlement authority. That is, they can't say, well, I think the adjustment is $10,000.
I'll let you go for 6. Yeah.
Right.
Yeah.
They don't get that to make a settlement like that. It's either right or wrong. They find errors and they make adjustments.
I see.
That's their function. Is it correct or incorrect? Once they determine what's correct or incorrect, then they'll present their findings in what's called a revenue agent's report. And the taxpayer can then agree or disagree. Now, if they disagree, they can file what's called a protest letter. And then by filing the protest letter, they're taking issue with the proposed adjustments. And they're saying, I want to take it to the next level, which is IRS appeals, which is a different function.
Okay. So I think that's a good point for us to end for today. We're going to have to come back and do another episode. This has been fascinating, but we're only about halfway done. Tony, thank you so much for being with us and explaining and sharing your expertise. Thank you all for listening, and I look forward to connecting with you next time.
Thank you for joining us today for another episode of Absolute Trust Talk Live. If you enjoyed listening in, then don't forget to subscribe. You can find us on Apple Podcasts or wherever you may listen by searching Absolute Trust Talk. While you're there, we would also love for you to leave us a review. And then why not share your favorite episodes with family, friends, or colleagues too? You can find all of our shows and corresponding show notes by visiting absolutetrustcounsel.com. You'll also find a variety of other free resources, including our ebooks, videos, blogs, presentations, and more. If you need help with your estate planning or administration, we also offer a free discovery call to help get the process started. You can find more information on booking your session by visiting absolutetrustcounsel.com/scheduling. If you join us for the broadcast, you can submit questions during the show. But if not, don't worry. You can always get in touch with us by sending a quick message to info@absolutetrustcounsel.com. Thanks again for listening. We'll see you soon.
This podcast is not meant to take the place of legal advice from an attorney and does not create an attorney-client relationship. If you do have a legal question or issue, please consult with an attorney.